Rosado with Kim Rosado LLP. We're tax attorneys. I'm here with my partner, Tony Kim. So today we're going to talk about the top 5 don'ts. This is what you should not do if you're under investigation by the IRS. So Tony, start us off. What's your number 1 don't in an IRS investigation?
My first of 5 don'ts. Don't engage in a combative relationship with the IRS. In an audit, I think a lot of people are fearful of what may occur in an audit, and you put all your fear and you focus that on the agent. Well, that agent must be bad because that agent is instilling so much fear in me. And so that, I think the tendency of that fear is to create a combative relationship. You've got to resist that. Understand, and I think it's hard, yes, but understand that you want to promote a cooperative relationship in an audit, not combative. And the reason is the agent has a lot of discretion. How many items to audit, whether to open additional years, perhaps open related entities, deciding third-party summons, whether to issue third-party summons or not. There's a lot of discretion. And what happens is when you have a human being and an auditor and you tweak them, you are adversarial and you make things difficult, it creates the wrong tone and a bad situation, and it could easily turn into a bad situation where it goes from bad, which is an audit. An audit is not a good thing, but it turns a bad situation worse. And so the first don't engage in a combative relationship with the IRS. What do you think, Nick?
Tony, I agree 100%. I mean, ultimately, these agents have a ton of cases. They have so many cases. A lot of the time, you don't want to be the case that stands out, that they want to delve into, that they want to spend a lot of time on. You want to have a good relationship. Give them the things that they need to wrap it up, and you want to. Everything has to be geared towards getting to closure of the case. Unnecessary combativeness doesn't help, right? And that's, as we were talking about last time, Tony. I mean, it's usually bluster, and there's no substance to it. It doesn't help, and it doesn't go anywhere. So I think that's a great way to start. What's the next one, Tony?
The next one, Nick, is something I've heard in the private sector, and I've only been in the private sector for, I think, 10 months now. I've been with the government. I had been with the government a little over 26 years. I heard this in the government side when I was helping agents, and I've heard it now flip on the private sector side from clients that we picked up. And here's the issue. The issue is when the agent asks the taxpayer to sign a consent to extend the statute of limitations. So normally, the statute of limitations where the IRS has to make an assessment greater than what was reported as the tax liability on the return is normally 3 years from the date the return was filed, or 3 years from the date the return is due, whichever is the later date, and then just add 3 years. When the IRS gets close to that assessment limitation date, the agent will ask the taxpayer sign a consent and extend that date. And in support of that request, the agent will likely say, if you don't sign it, then you leave me no choice but to make an adjustment. Do you really want me to do that, or do you want to sign the consent? Now, on the taxpayer side, it's not a quick, hard yes or no. And what I've heard often was taxpayers' reps quickly say, yes, I don't want an audit to result in an adjustment, so I'll sign, or I'll instruct my taxpayer to sign the consent to extend. And it's not a knee-jerk yes. You have to consider, as a taxpayer, this do not knee-jerk reaction. Do not all of a sudden, without thinking carefully, sign a consent to extend the statute of limitations. Consider your options. What will happen if I do? What will happen if I don't? What may happen? What may not? You've got to consider the ramifications. And then once you go through the options, then decide. It's not a perfunctory yes. You do not have to sign the consent. What do you think, Nick?
I mean, that's right on point, Tony. So like I was saying, you always have to look towards closure. How do we get to closure? Because the longer an investigation goes on, the more they can dig into, the more they can develop the case. If they have to quickly close the case, the investigation is over. They can't delve into any more issues. They can't get any more evidence against you. They have to go with what they have. Certainly there was an adjustment, and that's scary to say that, okay, the IRS is proposing that I owe additional tax, but you do have the right to go to court and petition, and you know, you also have the right to administrative appeal of those findings. So while it's a proposed adjustment, sometimes it's a great idea just to have them close the case, move forward, fight it in appeals, fight it in court. Because, hey, at the end of the day, the IRS isn't digging around anymore. That's great news. So you've gotten to closure. So it is something that you really have to think about and understand that you do have the right to say no, which I think in most cases people don't really quite understand. So that's a great point, Tony. What's the next one?
So the third of 5 don'ts in an audit is don't mislead the IRS in your responses during an audit. And you think, of course, I would never do that. I wouldn't lie. Misleading doesn't necessarily mean lying. So what do I mean by that? The IRS asks for some information, and you soft pedal, and from the IRS side, when Nick, you and I were with the IRS, when we get written responses, you could see when there are games being played. And it's either misleading by omission, or it's misleading because there's a way of drafting responses where you know that they're playing games. And when the IRS sees that, bells and whistles go off, and it's going to take the audit to the next level, because if the agent is somewhat puzzled or offended by knowing omissions or misleading statements, an agent may then get an IRS attorney involved, because an IRS attorney is not necessarily automatically involved in an audit. But if an agent feels that they are being played or they're being misled, that may prompt the agent to then say, I'm going to get an attorney involved, and that's not going to be good for the taxpayer. Because now, instead of one agent, you may have a team of agents, or you may have an attorney involved, which ratchets up the level of inquiry in your case. So be very, very cautious about any responses that may mislead the IRS, because it definitely is not a good move. It will lead, or I won't say it will lead, but it may lead to consequences and a result that you do not like as a taxpayer. So don't do that. What do you think, Nick?
So Tony, I mean, I think we've seen time and time again in many high-profile cases, it's not necessarily the crime itself, but it's the cover-up that gets you in trouble. And that's not to say we're not talking about misleading in the sense of misrepresenting. Even misleading, I think that opens a can of worms, and that doesn't necessarily mean that that's going to draw out a criminal prosecution. It, certainly could be the start of it if they start looking closely at what you're providing them. But there are differing levels, so it can lead to potential civil fraud if they think that you're trying to mislead them during the audit. So you do have to be careful. On the other side, that's not to say that you can't withhold in situations. You don't have to provide all information. So there are ways to withhold information, but not be misleading about it. So that's a great point, Tony. What's number 4 on your list?
Number 4 of what a taxpayer should not do in an audit is to be overly cooperative with the IRS. Now, in our previous segment where we talked about the dues, a lot of it was to be cooperative, to be kind, to facilitate, to engender trust with the IRS. This one is the balancing act of making sure that taxpayers know that you've got to make sure you understand there's a line and you shouldn't cross that line to be overly cooperative. And examples that I've seen in private practice is where the IRS says, hey, I'd like this document. And the taxpayer says, well, I don't have this document. And a rep that we find out later says, well, yeah, we didn't have the document. So what we did was we created it, or we created a summary from several documents. So we created something in response to the IRS's request. And there, the taxpayer is being overly cooperative. That is an information document request that says, I want X information. A document does not need to be created in response to an IRS request. An IRS request is only for information that is in the possession of the IRS, excuse me, of the taxpayer, not something that is required to be created. So that is being overly cooperative. So be understanding of your role which is be cooperative, but don't be overly cooperative. You don't have to create documents. And the other thing to be very clear on is I think a lot of accounting professionals, when they get involved, they're asked for information, which may include emails between them and the taxpayer. But that communication may be subject to the statutory privilege provided under Section 7525 for tax advice. So if the communication relates to tax communication for the purpose of preparing a return, well, that has to be produced. But if it's communication related to tax advice, not tax return preparation, between an accountant and the client, that's tax advice, not tax return preparation work. Tax advice that is subject to statutory privilege that should not be produced unless the taxpayer allows it by waiving privilege. So there, if you're overly cooperative, you simply produce everything. And a practitioner and taxpayer must really be cautious about just wholesale producing everything or creating documents. You don't do that, because it creates problems for the taxpayer. Because if you unearth everything and you create documents, you may make mistakes, or you may expand an audit, or create issue investigation on things the IRS never had an eye for. So the fourth don't is don't be overly cooperative. What do you think, Nick?
I think that's a great point, Tony. So, I think one thing to maybe tease out is that certainly you want to read the information requests very closely, and you want to read it intelligently, and you want to see what's the meaning of what they're asking for, and what potentially you have, they're asking you to provide. To the extent you can take the meaning from that, you can gain some control over the audit, because you have, once you have the meaning of that, whatever the request is, and it could be multiple meanings, then you have some control over what to provide, what you can provide. So you certainly, you want to try to take some control of the audit. You don't want to just give the IRS everything that you think might be relevant. You want to respond to what they're asking for, and you want to try to gain as much control in that process as possible. So that's my take on it, Tony. So let's go to the last one. What's your number 5 don't?
The last of the 5 don'ts. The 5th don't talk or communicate with the IRS without involving your tax representative. So I think the first thing is, if you get into an audit, you're selected for an audit, I think it's the very rare case that a taxpayer would do better or well without engaging a tax professional, whether that be an accountant, an enrolled agent, a CPA, or a tax attorney. Get a professional to help you serve as your representative in the tax audit. Now, when you do that, do not communicate in any way on the phone or in written form with the IRS unless your representative is present with you. Why is that? Well, first, let me say this. Under the IRS rules, once you have a power of attorney form, a Form 2048 in place, the IRS is prohibited from contacting the taxpayer directly. But that is not to say that it may not happen. It may be inadvertent. There are bypass rules where if the taxpayer's representative is being difficult, the IRS can go around or bypass the representative. That does not happen often. It's very, very rare that that would happen. So in the normal instance where the rep is there, has not been bypassed, make sure that if you perhaps get an IRS agent that is not clear on the fact that they cannot bypass the rep, do not communicate with the agent, because it may create a situation where something unintended happens, which is going to be harmful for the taxpayer. Let the representative stay engaged, protect your interests, and do not communicate with the IRS without your representative present. What do you think, Nick?
I think 100% don't ever communicate with the IRS without your rep present. There's a reason why usually the first step in an IRS criminal investigation is for 2 special agents to show up at your door and to try to get you to answer questions without a representative present, because ultimately they are trying to get you to make incriminating statements. So you might not be aware of your constitutional rights, your statutory rights in these situations. So if you are confronted, you have the right to ask to speak to an attorney and to have an attorney present in any of these communications. And that should always be respected. So I think that that's a great way to end it, Tony, because that is maybe the most important point that we can make, right?
Yeah. Well, hopefully the audience takes into account these 5 don'ts. There are many more, but to get through the don'ts and the do's in an IRS audit, the best way to ensure that a taxpayer does well in an audit is to go through not only reviewing these 5 don'ts in our previous video on the 5 do's in an audit, but to hire a competent tax professional to make sure that they get the entire representation of understanding all the different aspects, statutory, procedurally, that are available to a taxpayer to make sure that the audit goes well. Because ultimately, because we're both former IRS attorneys, ultimately the IRS wants to investigate, but hopefully when the information is there, just resolve and close quickly. And so the mission of the IRS is not only to educate the taxpayers about how to comply, but not present an onerous intrusion into taxpayers' lives. And to do that, you've got to get a tax professional that is competent to get this thing done quickly. And these do's and don'ts hopefully help taxpayers do just that, get the tax audit completed quickly.